Welcome back. S&P on track to snap a 7-day win streak after hitting a fresh all-time high earlier. Here to share how they're positioning right now in Power is Marta Norton and CNBC contributor Jason Snipe of Odyssey Capital Advisors. Nice to see you both. Marta, I begin with you. What do you think about this market here?
Well, we've certainly seen quite a run since April 8th. I think there's been fundamental underpinnings that justify the moves that we've seen. We've certainly seen earnings outpace what expectations were, especially after those expectations were lowered in the wake of Liberation Day. And the AI train just steams ahead. I think the question going forward is how much good news are these valuations pricing in? And at this point, they look a bit extreme. That's not calling a bubble, but saying that they look a bit stretched at this point in the game.
So what do I do if I agree with you?
Well, here's kind of how I'm thinking about it. When we're taking a look at a portfolio or a market like this one, where you are seeing this run, where maybe valuations are getting ahead of the good news, but the news is, in fact, good, I think it's more a time to rebalance, to reposition, to take some of those winnings from those that have run and redeploy them into areas that have been left behind. So healthcare, small caps, some of those areas where the sentiment isn't quite so stretched.
But then, Jason, don't I risk missing out on what could be a substantial leg higher? Even if I'm a little cautious about valuations, they can go a lot higher and get a lot more stretched from here. Or the earnings can just continue to deliver, so you're not so much worried about valuation because it's not multiple expansion, it's simply earnings growth.
Yeah, and I think the earnings will be really strong, Scott, starting next week with obviously the financials. But as it relates to mega cap tech, I mean, we've seen earnings growth above 20%, in that space. But I think to Marta's point, I think it is prudent going into 2026 to kind of start to table shape some of your growers and start to rotate into some of the other cyclical areas like, as she mentioned, healthcare, energy, industrials has obviously done well. But I think that's a prudent move towards the end of this year, not going into the fourth quarter, which we are currently in.
No, I understand that. But, I mean, why would I want to rotate into cyclicals? If I think the economy is going to be, even if the Fed's cutting, but think the labor market's going to continue to deteriorate to a degree and the economy is going to be a little weak, why would I want to rotate into cyclical stocks at the end of this year?
Because I think I think the earnings story is going to be positive. I think BREF is going to be like the RSP stories like that. I think are going to be good plays going into next year. Not to abandon, of course, not to abandon what has kind of taken you here, but I think that's going to be the prudent move going into next year.
You like small caps too? Do I read that right?
Yeah, no, I think small caps can work. Listen, I mean, the cutting cycle is underway. There's a 92% chance that we're going to cut this month, 88% chance that we'll cut in December. Then we have a new regime starting in May of next year, which I think will be leaning towards continuing this cutting cycle. I think my concern is around inflation. What the inflationary story will look like going forward. But I do think if that's the story, small caps can continue to work.
So, Marta, what are your expectations then? Where does the S&P likely to go, do you think, by year end?
Well, I don't necessarily expect a sell-off between now and the year end. I do think there's, true strength behind the earnings. I guess my thought is how much more can we grind higher? And of course, that rests on the performance that we see in this Q3 earnings season. Are we going to see continued upside surprises? There's room for that when we think about the CapEx spend, when we think about the deregulation trend, and of course, just kind of the AI boom more broadly. There are some things that I think can be a little bit more of a dead weight. I see the tariffs factor as being a long-term drag. Whether that really manifests itself as something that derails the earnings season that we're heading into, I don't think so, but I think it's something that we're going to have to continue to monitor. And then to your point, there are some economic questions that we have to wrestle with.